Let's head across to the management and see what they have to say on the back of the earnings as well. Let me introduce you all to all of them as well. First, let me get in Srini Pala. Overall, a mixed third quarter is what we could say. The numbers have missed estimates mainly on the margin slip on the back of the labor code and the restructuring costs. If you could help us understand the picture better, Srini Pala, CEO and MD at Wipro, Aparna Iyer, CFO at Wipro, and Saurabh Govil, CHRO at Wipro, join in. Srini, quarter has been slightly subdued in terms of the guidance that you've given for the fourth quarter. From here on, what is your expectation in terms of the demand trends? Because the analysts were expecting something better.
Sure. I think the best way for me to reflect on the demand situation is the pipeline that we have. Our pipeline is very strong at this point in time, and it is very secular across markets and across sectors. And I know it is a combination of both the large and small deals. And if you look at if you give a little bit of a deep dive into the pipeline, it's a combination of vendor consolidation, cost optimization, and of course, the discretionary spend. At this point in time, the clarity on discretionary spend is not there because of the uncertainties. And January also seems to be the month where we have a lot more the clients coming out with their budgets. So we're going to look at how the budget pools will be from a discretionary perspective. But many of our clients are looking at cost optimization, vendor consolidation to take the cost out so that they can reflect on the new discretionary spend. And they will be around AI, could be projects around AI across the advisory services, be it change management, security, or data. It could be around rewrite and reimagine the existing processes. So that's how it looks. The pipeline trend continues to be strong. And if you look at our quarter three bookings, around $3.3 billion. And if you look at the annualized YTD bookings, we were around $13 billion, which is a 25% growth. I think, our focus right now is to convert some of the large deals that we have won into the revenue stream. That's one thing that we're staying focused on. And of course, execute in quarter four on the deal pipelines that we have.
Okay, you mentioned about the deal pipeline. So what is that current large deal pipeline looking like? And how confident are you in terms of converting this into revenue in the coming quarters, Srini?
So some of the large deals that we have won are actually taking a little bit longer time than the usual ones. And of course, it varies from client to client. I think, once that comes through, I think, that should accelerate the revenue momentum for us. So at this point in time, what I would say is that the large deals that we have won in the first, the last 3 quarters, and some of those deals needs to get ramped up. And second, the pipeline that we have right now that I talked about, and some of them we have to win in the month 1 and month 2, which can also help us execute and bring the revenue into quarter 4. So our guidance of 0 to 2% bakes into all these parameters, Iran.
Okay. Any color that you could provide on the nature of the recent deal wins, specifically the proportion of cost optimization deals versus digital transformation, or even for that matter, consulting engagements?
Sure, that's a question which I would explain in 3 parts. If you look at the pipeline and the deals that we have won so far, there are 3 parts to that. Number 1 is support and run, which is around application support, infrastructure management, and business process services. All this entire aspect of run and support, we are leading it with AI. And for that, we launched Wipro Intelligent Wings last quarter, and that's how we're going to infuse. Actually, these entire solutions are going to have AI completely infused end to end. So for us, any deal that we have, it's going to be AI first, and every opportunity, especially in run and support, we'll have AI. The second piece of our Wipro Intelligence is Vega, which is more around software development lifecycle and product development lifecycle. Again, there we use all the AI tools which are part of the Vega trend. So I would say every project that we're going to win, we're going to start with AI, and that's how we're going to do it. And the third piece is more and more of business innovation, specific projects where the clients wants to infuse AI or rewrite their application, modernize their application, build SLMs, model building, data curation, and so on and so forth. Those will be part of the, again, core AI projects that are driving in. So those are the three components of the way we see going forward as well, Hiral.
And you know, several peers are expressing confidence in a better calendar year 2026, and so are fund managers of that opinion to some extent. Does your internal outlook align with this sentiment? And when do you anticipate returning to that industry-leading organic growth rates?
Sure, Hiral, and I think that's a question the board asks me as well, so that's a very valid question. Having said that, right now, I think what we have done is, as you know, as an organization, we give quarter-to-quarter forecast. As far as the calendar year 2026 is concerned, I think the economies of most of the world, I think, continues to be similar. And second, we see the tech budgets clearly being there, because tech spend is going to be driving a lot of business aspects of our clients. So whether any industry that you are in, AI is going to lead the transformation of their business as well. So in that context, I think it is reflecting in our pipeline. I think our focus has to be converting that pipeline into deal wins and converting that into revenue, and that's how I would put it, Hiral.
Moving on, when we talk about the IT services segment, the operating margins have improved sequentially as well. I mean, the CFO has highlighted that as the best margin performance in years. How sustainable is this kind of margin improvement? And what are the key levers that you're looking at that will help maintain or expand margins going forward?
Yeah, Hiral, thanks for the question. I think our journey of margin improvement has been fairly consistent. We've been very resilient, even in a very weak revenue environment. We've been improving our margins quite consistently over the last 8 quarters. The fact that we've delivered 17.6% is also a testimony to the excellent work that the teams have delivered, right? We've had improvement in fixed price profitability. Our utilization is running at an optimal level. We are infusing AI into all our programs, and that is helping. And last but not the least, we've also had the rupee depreciation helping us. How sustainable is 17.6%? We've shared that our aspirational band is to keep our margins between 17 to 17.5%, and that's broadly the band we've tried to keep our margins over the last few quarters, and that will be the endeavor, and we will see. And you're right, we have made investments for growth, and we will have to absorb them.